Welcome to Caliente Topics. This is your daily tax webcast. My name is Veronica Russell from MMTAXMAN.com. I have Patrick Russell, EA, from MMTAXMAN.com as well. Good morning, Patrick. Happy Monday. And what's the topic for today?
Happy Monday to you, Veronica. Guys, today we're going to be talking about a term that we usually hear in the real estate world when you have a related party, meaning the seller and the buyer have a relationship, and the seller agrees to a lower selling price than the appraised value of the home, right? And this exists and happens all the time. And one of the reasons why this is such a popular line item, Veronica, is because it is allowed not only by the IRS code, but it is also allowed by FHA loan rules. So typically what you have is a related party situation. Let's say parents own the house and they want to sell to their child at a significantly lower market value or sales price than what the appraised value of the home is. For instance, let's throw some numbers out there. Assuming you want to buy a $700,000 home, but you want to buy it at $400,000, FHA allows the seller to take the lower sales price and use the difference as a down payment by essentially gifting that equity to the buyer. Now, this can only occur in related party transactions. So that's what makes the gift of equity kind of a unique line item. And specifically because it only really deals with FHA-backed loans. Why? Because there's usually deposits of 20% that usually goes with qualifying with an FH loan to purchase the rest of the house, right? To qualify for the remaining value of the sales price, you need to at least put 20% down. Mm-hmm. Related party transactions through the gift of equity is an easy way for the child to be able to put a cashless deposit down on that sale. Now, what gift of equity typically falls under in the IRS code is gift tax rules, right? And so, softball question to you, Veronica. What's the annual exemption of gift that a person can give in either property or money and not have a reporting to the government?
$15,000.
That's exactly right. So if the gift per se, to include a gift of equity, resulted in a gift value of $15,000 or less, there is no reporting to the IRS. Okay. Now, in the case if the value of that gift of equity exceeds $15,000, does the seller have a reporting requirement to the IRS? Yes, they do. The Form 709. Whatever the value of the gift of equity might be, let's say $100,000. And so $100,000 minus, you do get to $15,000 exemption. $30,000 if we're talking about husband and wife, mom and dad filing a joint return. And so you are talking about potentially a hit to the lifetime estate exemption of currently right now we know is $11.7 million, thanks to the orange one, Donald Trump, as well as circumstances like COVID-19 and existential threat. Provisions in the 2017 TCJA increased temporarily the estate lifetime gift and estate exemption, meaning you can give in your lifetime $11.7 million and not as an estate and not have to pay a dime in taxes. So keep in mind, even if you do have a filing requirement when it comes to this real estate transaction, that doesn't necessarily mean, and in most cases, 99% of cases, also means that it is a tax-free transaction as well. And so this is something that is very common in the real estate world, but it's not very common unless you're talking about a related transaction where you have seller and the buyer are related to each other, and so they can qualify for those FHA rules.
Quick question to you, Patrick. So one of our clients is asking, how can they make sure that it's related transaction per se? Who qualifies on that particular rule.
Very good. And so if we did a little bit of research, you would find that there actually is a definition for family members, and it does represent its kids and descendants of those kids, and I believe nieces and nephews as well.
Yeah.
So you have mother, father, son, daughter, descendants of those, brother, sister, descendants of those.
A lot. Pretty much, just
Absolutely.
related. Okay.
Absolutely. So, and that does follow most estate next to kin guidelines as well. So, great question, guys. Also, when it comes to the 1099 filing, will there be a 1099 S as in sales proceeds from a real estate transaction that would be filed from the escrow company to the IRS? Absolutely. The $600 limit threshold would apply even in a 1099 real estate transaction. So the 1099 guides the parties' reporting requirements and necessities as they get that at the end of the year. Guys, a quick way to get a quick answer is by using our comment box below. Don't just subscribe to this channel, even though we will be doing this pro bono tax workshop on a daily basis, but lend your voices to the show and make it a whole lot more interesting. Guys, have a great day. We'll see you tomorrow.